way, someone you don't know, and ask them the question, what about property investing? And I assume you guys are interested in property investing. What about property investing is the most difficult thing for you? Okay, so tell us, what's the most difficult thing in terms of property investing? What's your biggest challenge? What's your biggest obstacle? Why are you here, right? Like, why are you making time out of your weeknight and missing out on all sorts of other things to be here? What's that thing that's kind of like really hard for you? And when they give you their answer, I want you to answer it, you know, to the best of your ability. All right, we're all on different phases, different stages, different parts of our property investing journey. Some of us are novices, some of us are more proficient. But whatever best you can, try to answer that question for them, okay? And try to do this with someone you hopefully don't know. If you know both people around you, that's fine as well. But yeah, I just want you to do that. And then once you complete that, then your partner should ask you the same question. What's your biggest challenge in property investing? And then they should try to answer it, okay? And so this is not an excuse to talk about the really crappy Melbourne weather. This is not an excuse to talk about, what's that sport, AFL? It's not an excuse to kind of talk about random stuff. Stick to the point, okay? Probably going to get beaten out of here before the end of the night. But, and then what I'm going to do, you know, we'll go for about 5-10 minutes, something like that. And then I'll just ask for some random volunteers, maybe like 3-4 people. And I want you to give your answers to the challenge that your partner has. So I'm just going to point to you and put you on the spot, okay? So it's not actually volunteers, it's just me. I feel that this is the best way to start. Events like this, it takes the pressure off me, puts it on you. Is that okay? Yeah. Does anyone need to go use the bathroom real quick? And just last one, if you're coming, guys, welcome to the working crowd. If there's like a seat in the middle, if you could just kind of squeeze in, I think there's 2 seats there unless they're reserved. Otherwise, you can sit on the stairs, which I think are padded very comfortably.
There's one here too.
On the side as well. And for those of you who just came in, you can ask your partner what the icebreaker question was. But yeah, 5-10 minutes, go ahead guys.
Hello, 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 hello.
Okay, thank you so much. So those of you who just came in the last 5 minutes, we started off with like a bit of an icebreaker. The exercise was to turn to the person next to us, someone who you didn't really know that well, and ask the question, what's like the biggest challenge they face in property investing? You know, we're all on different spheres of the property investing journey. Some of us may not have started, some of us may be well progressed. The question was, what's the biggest challenge we face, or what's the biggest hurdle, the biggest obstacle that we encounter? And then your partner, or you were meant to answer that question, or try to for your answer, for your partner, and then we would swap it around. Okay, so I know I said that I'd kind of point to people and see who wanted to share, but I'll just be a little bit more kind and allow you to volunteer. But before I do so, I also teach meditation, and we're going to start. No, we're not starting. But I did want to introduce this concept of like just a judgment-free zone. You know, like we're at work, we're with, I don't know, colleagues. You know, most of us probably came straight from work. You kind of have to be someone you're not. Sometimes, not all the time. Sometimes. I just want us to be super honest, super authentic, super raw, because I feel that's the best way that people will speak up and not fear being judged. And also, that's the best way to absorb knowledge as well. Just kind of, you know, as kind of woo-woo as it sounds, have an open heart. Open mind, open heart. So, all right, with that being said, and hopefully removing any, you know, scaredness or shyness or anything like that, does anyone want to volunteer what obstacle their partner said they faced, or what challenge they faced, and what their answer to that was? I just need one person to get the ball rolling. There you go.
Hi. So we were having a chat between us, and I think both Victor and...
Can you speak a little bit louder if possible?
Sure. So I was speaking with Victor and Andrew about the struggles they had. And one of the struggles both of them had was convincing their family about borderless investment, because they hadn't seen a property and, you know, you're doing this. I came in the middle of the conversation, but rather than telling them what to do, I told my experience of what I've done in the last 6 months, or since I joined the class. And so I was explaining them in the last 6 months I've invested in three different states, and it all happened in last October to May in this 6 months time. So hopefully that will give that encouragement of once you have the knowledge what you're trying to do.
Yeah.
And my struggle was, I was telling them about the borrowing capacity, like I've gone up to that property and in case of residence, how, you know, I go to the different states, and of course obviously there's the tax from the cybersecurity and stuff. So we talked about how, you know, we can probably slow adoption of a different lender, or wait for the ADR to go up big, and things like those. So yeah, that was the conversation.
And what's your name? And nice to meet you. So who else here is a little bit fearful of investing outside Melbourne? Put your hand up. Really high stakes. Okay, it's like 50% of people. It's because you know Melbourne, right? It's like familiar. So tell me, you bought, was it 3 properties, did you say?
That's right.
Outside or interstate?
Yeah.
What's just one piece of advice that you could give to everyone, or half the people here, who are scared of investing interstate? Just one, maybe just in a nutshell, elevator pitch.
Knowledge.
Knowledge?
Yeah.
Okay, let me expand upon that. So like, I do many videos on this, and by the way, I'm just very grateful to everyone who is part of the Facebook group and follows the YouTube content as well. There's obviously a system and a method behind the madness, but the biggest way to overcome your fear of investing interstate, which you really need to do, because in Melbourne, I mean, everything's so expensive, and just wait, it's about to go a little bit down as well. the truth is that property managers, they're not real estate agents necessarily. They're not there to take you for a ride. Property managers are these people who inspect properties for you, most of the time free of cost, and they effectively are your local boots on the ground. So let's say you're buying in Perth, let's say you're buying in Far North Queensland or Gold Coast, wherever. They do all the hard work for you. So you're like, okay, I can't fly there, nor do I really want to. What if the pictures on realestate.com or Domain are fake? Yeah, who has that kind of concern? Put your hand up. All right, not many people trust realestate.com. You know, you can overcome that by having those local boots on the ground that inspect the properties for you. And the same thing when you actually hold the property, when you hold it for the next 20 to 30 years, whatever the case is, those people manage the maintenance, getting tenants. You know, it's very rare that a tenant trashes the place, but if, you know, heaven forbid they do, that's all taken care of. You don't need to actually physically go there. So, I mean, there's so much more to be said, but that's kind of an elevated picture of how to overcome that fear. Thank you. All right, who else would want to volunteer? It's not that hard.
So, yeah, I met Harry for the first time today, and his question was most popular question of all time, like what is the best location to invest?
What's the answer?
So my answer was that rather than focusing on finding the best location, we need to focus on finding the right strategy for you. So there are different factors like your borrowing capacity, risk appetite, and then are you focusing on cash flow or capital gain? So we need to work around those strategies. And then the next step is to find out the location. And the main advice was that any suburb which is perfect for me, it might not be good for you.
Right. That's great advice. And so who came here tonight hoping that I would tell you where to invest? Put your hands up. No one. Okay, 3 people. I'm glad you didn't, because I'm not. No, I'm happy to tell you actually. My clients will hate me later. But that's a really good point. You know, everyone, maybe not you guys, but everyone on social media, on Facebook groups, and you know, everyone just wants to know what's the next hotspot. And the reality is that there is no way. I know that, you know, there's an image of a property seminar, a property spruiker that's meant to stand up here and say, you know, invest in this location because it's going to double your money, you're going to become financially free, all that stuff. That doesn't exist. Okay, you can leave if you want to, but that's the truth. That no one can actually say, hand on heart, that this place is going to go up by 20% this year, 30% this year, 10% this year, whatever. The reality is that we can use a lot of data to get really close. We can't predict it perfectly, but what we can do is also reveal that there's not just one magical hotspot that everyone should be investing in. Like right now, and everyone who's a client in this room will know, there's like more than 50 or 60 places that are very investment worthy across Australia right now. In all states and territories, maybe barring Tassie, maybe Northern Territory as well. And like Bennett said, it comes back to your own risk profile. It also comes back to your own strategy. I might buy a place in the Gold Coast, for example, and for another person, that might be the worst decision for them, because for them it would be negatively geared. This will be my, you know, so to speak, third property. For them it would be their first property. They need to be lower risk. I'm just making this up. But you understand? So it's so important to educate yourself and really build a strategy. And what does strategy mean? Like everyone throws this word around strategy. Oh, you need a strategy, you need a strategy. Strategy just means 4 things. Strategy means what's your risk profile, and you need to understand what a risk profile means. Okay, you actually have to understand the elements of it to be able to develop it. The second thing that strategy means is what is your total borrowing capacity and how you chop that up to buy your first or next property. The third thing it means is what yield should you be chasing. Like let's say Melbourne. Over the last 3 years, 2.5 years, probably everyone here who owns a home in Melbourne, it's gone up big time, right? Basically anywhere in Australia. But the fact is that if you had bought a house in Melbourne 3 years ago, or let's say a year ago, yes, it would have gone up in value, but it would have been negative geared. It would have cost you money to hold. And so even if you're thinking, hey PK, it's not really an issue for me, right? Like I'm on a high income, my household budget can afford it, it's all good. Like I just want capital growth. The reality is the bank's paying this. The bank's saying, oh, we know you can afford it, but you could have borrowed 2 million, now you can only borrow 1.5 million because it's negatively geared. So yield or cash flow is that third important element of your strategy. Everyone's different. And then the fourth thing is how active or passive you want to be. A lot of us, we're happy to develop, subdivide, renovate, blah, 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 blah. Other people just want to be like, all right, this whole property investing thing, I hope it works, but I just want to buy some properties and kind of just let them do their thing, right? I don't want to get too involved. So that's the fourth bit, how active or passive you want to be. That's all that strategy means. And I think people make a little bit too much of it. Strategy is not summer selection. Strategy informs summer selection. All right, another volunteer, please. Who else would like to volunteer? The question or the challenge their partner is facing and what they are doing about it.
The question we discussed is where to start here on the journey. And I said, follow the process. You need to do the legwork. You need to crunch the data. And you just start something, but you need to start.
Yeah.
And the other answer to your question in terms of buying property interstate, we just bought something in Brisbane, and I would have been absolutely risk averse before, and there's no way we would have done it. And now we go, why didn't we do it before? So it can be done. Trust your property manager, and follow the process.
And if I could just ask an extension of that, why didn't you do it before? Just for the benefit of everyone who's maybe in that situation.
We actually, I'm going to say this quietly so no one can hear, engaged a buyer's advocate.
We don't use those words.
And when he couldn't deliver, and I think all that you say or that you advocate is actually the truth. He couldn't deliver, so we started looking for an alternative strategy, and then in terms of self-education, that's obviously a much better strategy. And that's how we found you. But yeah, walk away from the buyer's advocate, do it yourself, and have a better understanding of what you're trying to achieve, and the strategy, and the risk profile, and the areas, etc.
Right. And for anyone who's thinking, I don't actually know who that is, I didn't plant that person. And just for the record, this is, I'm not here to sell my course tonight. That's not what I do ever really. Buyers agents have their place in the world. There are good buyers agents, there are bad, just in any profession. There's good people and also good people in the middle. What we love, and exactly like you said, we are proponents of education. Even if you do outsource it, get educated, because no one, including me, cares about your finances as much as you do. Okay, that's a fact. So that's why education is so important. Thank you for sharing. Last one, yes, please.
We were discussing one point, like we both recently started.
A little bit louder if you can.
Yeah, we were discussing one point, and we both have recently started, so we're pretty new. We haven't invested yet. What if the last 2 years of data is not the true reflection due to pandemic? And if I compare the 5-year worth of data for a server, it had grown 5 years ago a little bit, and then it had negative growth, and then during the pandemic it had or a decent growth, I won't say negative. So what is the risk factor involved in that area? It ticks all the data factors as correct, and it ticks all of them. What is the risk still involved with it, considering 5 years that it had previously grown as negative, and during just the last 2 years it has gone a bit positive? Looking at the future, how can we be sure on that? So this was what we were discussing, and I had the same question, so I couldn't answer that.
Yeah. No, that's a good point, and this is probably, let's sort of tell it for how it is. That's the biggest risk in the property market at the moment. People, almost the opposite of what you're saying, people taking the last 2 years of data or 3 years of data in an environment where a rising tide lifts all ships, and saying this is a good suburb because it's risen in the past. You know, you hear this in a lot of content producers. They say this suburb has done well in the last 10 years, last 20 years, therefore it's likely to continue. Have you heard that before? Yeah. It's actually just not true, right? And if you bring that to the micro, you know, saying this suburb has done well in the last 2 years, 3 years, that's the biggest risk in the property market, to select a suburb that now has peaked. And in fact, what investors should do, and this is, let's get a little bit technical here, there's this concept called reversion to the mean, which is to say that if in the last 2 years, in the last 5 years, in the last 10 years, this suburb has outperformed, let's say it's grown by 20% per annum, 10% per annum, whatever it is, it's unlikely to actually do that going forward. Right? Because in the long term, property in this country grows at between 6 and 7%. So statistically, over the 30-year period, it averages out. So it has to come down. And so what you actually want to find is areas, kind of a little bit opposite to what you said, that even in this huge boom, haven't done that well yet. Does that make sense? That haven't done well. I know it's kind of counterintuitive because you're like, oh, Australian properties boomed. Why on earth would I buy in a place like, and I'm not saying rush out and buy it here, but let's say Tamworth. Why on earth would I buy in Tamworth that's only gone up 10% in the last 12 months, when everything else has gone up more than 20%? Right? It's actually the opposite of that. Those are the areas that you should be trying to find. And after it's hit a certain threshold of growth in the last 2, 3, 4 years, then you just say, look, the data is still good, but I don't want to buy a property that's grown more than 60%, 70% in the last 5 years. I just don't want to do it. Right? So that's actually how to kind of approach it. Does that make sense? Cool. All right. Well, I've got a lot of eyes on me, and I'm trying to deliver. Right? Well, I'm going to ask you, and once again, be honest. Is, you know, you've taken your time to come here tonight. Unfortunately, not everyone's able to sit down. Apologies for that. I just want to, maybe some people can just shout out or raise your hands. What's your expectation from tonight? Like, what do you want from me? Like, what do you want from each other? Maybe just raise your hand, or yeah, please.
I think like looking for people with the same interests, get connections, and hopefully we can get some question answered by you. Because like when you answer some question, I immediately have follow-up question for you. Yeah. And
Perfect. So at the end, what we'll definitely do to that point is, whilst everyone's kind of like a seminar style right now, but later on we'll kind of lose the seats and go outside, and then people just talk to each other, because it's not about me, it's about the group. What else?
Yes.
What's the other?
I want to know a bit more about your course, because I want to do it by myself with my missus as well. We've started investing, but yeah, we kind of want to know where to go if you want to analyze data, RVA and things like that. But knowing your course gives a lot of that education and stuff, and we kind of want to learn more and gear ourselves with. Yeah.
Simulator. No, I don't want to talk about the course tonight or anything like that, but we can definitely chat one-on-one later, or the website. I appreciate it.
Cheers.
Yeah.
So Kiki, my question is that in your YouTube videos, you refer everything you should do is it should be in accordance to the data. Now, my question is that.
Is this a question, sorry, or an expectation from tonight?
Expectations in a form of a question. So there's okay, if you could throw some light on this, that really, why should I? So why should I trust the data what's in there and put my money? I know that you're selling your videos that you have done methodology that you have followed in the past, and that I've actually done but I just need to have a reason to trust on it.
Sure. Let me come back to that we'll do a Q&A, I'll come back to that one if that's okay. Thank you. Yep. An expectation from tonight.
Something similar, but let's say somebody has a pool of money to invest, right? There are a number of different options available. At where we are, investment is always like 5 years, 10 years, right? how should people choose whether property or other investment options?
Right. Okay. Also another good question. I'll come back to. Maybe this is just an impetus to get into the Q&A. Maybe last one here.
Yeah, Peter, I just want to understand the discussion, if you can think of how to turn a negatively geared property into positively geared without selling.
All right, let's just do Q&A here.
All right.
I'm prepared for this. Let's go. I'll start with that one. And maybe what I'll do then, just to kind of frame the next hour for everyone, we'll do some Q&A, and then I wanted to, there's this saying that example is higher than precept. I can kind of speak and it kind of makes some sense, but when someone's actually done it, it's like, oh yeah, that makes sense now. So maybe I'll ask one or two of my clients to not talk about the course or big it up, but actually just share their own journey, and then you can ask them questions as well. And yes, they have been planted. These are only very successful clients. And then maybe we'll do some stuff at the end. So how to turn a negatively geared property into a positively geared property, pay the loan off. Do you agree?
It's easier finding that answer.
No, I'm being a little bit facetious, sorry about that. Who has a negatively geared investment property here? Okay, thanks for being honest. So the way to make a negatively geared property into a positively geared property is, you've got maybe a few options, but one is to buy other properties that are positively geared. So even though you're not able to make that negatively geared property positive, the portfolio can become positive. Does that make sense? Because ultimately it's the portfolio that you care about, right? And just on that, it kind of sparks my memory that there's this concept in property investing. You hear it on all the podcasts, smart property investment, all that sort of thing. That who's heard of pigeon pairing? Pigeon pairing? Pigeon pairing properties. It's where you buy one negatively geared growth property, and then you pair it with one positively geared property, and so the portfolio remains neutralized. Now that's complete garbage, because the problem is that premise is the fact that only negatively geared properties can grow, which isn't true. In the ever since I've been investing, let's say last 10, 15 years, there have been countless locations, whether capital cities or regional areas, that are positively geared and actually beaten the growth rate, not just my portfolio, everyone can do it, beaten the growth rate of Sydney, Melbourne. Okay, so the first kind of myth to bust is that you don't need to buy a negatively geared property to have growth, and so therefore pigeon pairing is kind of, I don't know who came up with it. So if you are new to property investing, if you haven't yet bought a property, my best advice to buy a positively geared property or having a positively geared portfolio is to buy a positively geared property and make sure you use data to have it grow. But if you already have one, coming back to my facetiousness before, you kind of do need to pay the loan off. Or if it's on principal and interest, you could convert it to interest only, and that way your outgoings will be less on a yearly basis and will become higher in cash flow. Is that okay? All right, and the other question before was why property as opposed to other asset classes? Someone was asking that. Now, none of this is financial advice, so hopefully no one's recording. In fact, does someone want to answer that question instead of me? Like, I don't profess to be an expert in everything. Does anyone have a legible answer to that question?
Leverage.
Leverage. Can you expand upon that?
You can just take on massive amounts of debt.
That doesn't sound very fun.
Like,
yeah.
As opposed to shares, there's some products like margin loans or NAV equity builder for things like shares, but the amount of leverage you can take on is much less, which is just going to not allow your portfolio to grow.
Yeah.
Assuming it is growing, obviously the leverage doesn't help if it's going over.
And that's kind of my line of thinking as well. So if anyone here already has shares and is thinking about property, not sure if property is for them, because let's be honest, shares are pretty easy. You just kind of buy some and you don't have to manage tenants, you don't need to manage maintenance, it's kind of all just numbers in the air. The key difference is is leverage. You know, yes, you can leverage the stocks as well. You can leverage ETFs, CFDs. You cannot leverage anything really, but the risk is so much higher. So property in Australia, there's only been two times, where the Australian property market nationally has gone down more than 20%. That was the First World War and the Second World War. Now, I can't predict the future, maybe something's going to happen tomorrow. But the stock market in the last 100 years has collapsed by more than 20% many, many, many more times. So if you're leveraged and you experience that volatility, like that's hard to sleep at night, like at least for me. But in property, it's traditionally been more stable. So leverage is good as long as you know how to pick the asset type. And the other thing I just want to mention why property is great is because you have control over it. Like, you know, ultimately, let's say you're buying Woolies, or you're buying BHP Billiton, or you're buying whatever. The CEO could change, the chairman could change, the board of directors could change, the company's strategy could change. You actually don't have much control over your investment. Now, I'm not saying you shouldn't buy stocks, like that's the last thing I'm saying. But all I'm saying is you have control. And if you're educated, like if you're not just outsourcing this, if you actually know what you're doing, you're the master of your own destiny. I'm not saying I'm some great person or anything like that, but I wouldn't be where I am if I invested in stocks. Okay, if just doing the same, I wouldn't be here. No one would be coming to this meetup right now. So that's my experience, and thank you for that answer as well. Okay, any other questions? Q&A, yes?
I do stock investing. So when I'm buying a stock, so there is a lot of data available in the public domain, different ratios on the stock, fundamental analysis, technical analysis, different stuff, and companies declare their results, and we can see the growth prospects. And so I know that similar is true for property also, but the number of ratios are available, like occupancy rate in that, so how the growth of the prices. So the data is available, but it's a past data, and if I need to know the future prospects of that particular suburb, so the data will be very less available. So most of the times it's based on like hearsay or friends or some reviews. So that is the first question. And second question is, in most of your properties you mentioned Facebook, so they are interstate buy. So when
depends where you live, but
yeah, when we are buying it, you say we need to choose a right property manager. So so without meeting them, so how can we choose a right property manager if we are buying?
Yeah, no, thank you for the questions. So the first question was really, how do we trust, and this maybe comes back to the other question I think you were asking, how do we trust historical data to predict the future? Because it's already happened, right? I think the first thing is that even in the stock market, we're doing the same thing, right? I used to be an investment banker. We're using EPS, earnings per share. We're using different leverage ratios. We're using dividend payout ratio, all sorts of, which is all based on this financial year and previous financial year's data, right? So even in stock trading, in fact, in anything in life, we're only using current data and historical data to predict the future. I mean, Melbourne has how many seasons in a day? Like 4 seasons in a day? You know, how much do these meteorologists get paid? Probably a lot of money. We're limited to what we have. So the option is, yes, the data isn't perfect. What other alternative do we have? Okay, and in statistics, there is this, sorry, to kind of bore anyone who's not so much into statistics. You can take one element and try to predict what its impact will be on another element. X, what will happen to Y. That's not so, even if the correlation is good, it's not so accurate because it's only one element. It could be super volatile. But when we take 20 elements and we use 30 elements and then they normalize each other, they provide checks and balances for each other to predict what this other element will do, then you have more robustness, right? Then you have more robustness. So that is the best we can do in property investing. It's not a perfect science, and to your question before, how do we trust that this works? The way that we build trust is by doing a mock test. You know, like, has anyone ever done those kind of mock share trading simulators where you like pick a stock and you put in fake $100 and see how it, that's what you can do. Like if you're super risk averse, you can say, all right, PK guy, not sure about him, right, definitely. And you know, let's kind of just apply the data and see where this suburb goes in 6 months, see where it goes if you're patient enough in 3 years, and perform that trial. Now that's suboptimal because you're wasting time. So the better thing would be to say, all right, I know this suburb, I know it's grown, or I know it hasn't grown. What was the data like 3 years ago? What was the data like 5 years ago? What was the data like 10 years ago? And do that 2 times, 10 times, 20 times, 100 times, depending on how much fidelity you're okay with. And historically, retrospectively prove that it works. And I don't have like a perfect system or anything like that, but more often than not, far more often than not, it's accurate. So that's the way I did it myself. You know, I actually put in my own money to buy properties as well, so I had the same questions, the same concerns. And your second question around property manager, how do you find a property manager? It's actually really simple, and you know, there's obviously different layers of understanding to be more accurate, but one simple way is to go to this website called ratemyagent.com.au, I think, and just put in the suburb, and it brings up your top-rated property managers. Now, of course, you need to, even amongst that list, there'll be good ones, bad ones, but that's a start. Yes?
We can stop on the demand to supply ratio. Simple data question. While I was doing week 2 of the...
I'll just hold you up. I just want to make sure that these are general questions and not just, because not everyone's a client here.
I mean, I think still could be generic if people are going through that weekly.
Okay, maybe we'll do one-on-one. But I think just to pick on that a little bit, just so everyone knows, there is so much data available online. There's, you know, who's heard of CoreLogic, RP Data, InvestStar, DSR, Location Score, HTag. There's so much data out there. The problem is not where to get data, it's how to interpret it. That is the issue. That is what people struggle with. Okay, one more question before we go to the next section.
Okay, come back to your answer before. Like, I'm looking forward to buy my next investment property, but I'm a bit worried, and I'm also investing in stock market, so I understand that we shouldn't chase the price. But there's also I can't have a debate between myself. Why is that suburb is not growing yet? Because I don't want to chasing the high, but I also don't want to pick like shitty suburb. Because obviously there must be a reason why everything grows except for that suburb. And what is your selection criteria? How to choose like, okay, something is not grow yet, and something is not going to grow in the near future. It's going to be the next 10, 20 years. Like something not to touch, and something potentially in the next 1, 2, 3 years.
Sure. It's obviously, so the question for everyone who didn't hear is what is my selection criteria of picking a suburb? That was the essence of it.
Yes,
make
especially
sure it grows.
among the suburb that's not growing yet.
That's not growing yet, but will grow.
Yes.
Okay.
And what is the strictly one, and what is the next potential?
Yeah. So maybe I'll come at this question. You know, sometimes what people want, and I'm saying this with you, what people want is like a bullet point list. Here's the 20 things that you need to look out for, and it's a tick cross exercise. If it was as easy as that, then you know we'd all be driving around in nice cars or whatever it is. Unfortunately, it's not. So like, I wouldn't be able to give an answer holistically in terms of all the selection criteria, but the way that I'll answer it is one of the key reasons why a suburb doesn't grow. You know, everyone looks at population, let's just kind of pick on population. Everyone thinks that you need to follow population to find that demand growth and find an area that will boom. I know Brisbane's boomed, but let's just rewind a year back. For the last 10 years, 2010 to 2020, Brisbane had the second highest population growth out of anywhere in Australia, and detached houses grew by 18%. Okay, and I know like kind of down in Sydney, down in Melbourne here, you know, everyone kind of looks at Brisbane as this kind of like unicorn. It's affordable. Like, how I can buy something for $600,000? you know, like I'd never buy that here in Melbourne. But the reality was that the problem why Brisbane didn't grow, even though the population was so good, was supply. There was so many buildings, so many new houses, units and new houses coming out of the ground in Brisbane. So even though there was interstate migration, that's not a new thing. Like people have been, Melbourne loses people to Brisbane every year. It's not a COVID phenomenon. Same with Sydney. It's not the problem of demand that Brisbane faced, it was supply. So when you find a suburb, coming down to the micro, when you find a suburb that, you know, hasn't really been moving, even though the data seems to be good, check the supply side. How many houses have been coming out? How many units have been coming out? And that, you know, normally will tell you, yep, demand was high, but supply was high as well. Demand is continuing to be high, but now supply is coming down. And that's why that was a big cause of the boom, you know, in the last 2 years. There's just hardly been any construction because building costs have gone up. You know, it's just really been hard to build because of all the supply chain bottlenecks. So that's kind of one way to look at it, if that makes sense. All right, we'll do more Q&A, but what I wanted to do, just so you don't get bored of my voice, is I have a friend, hopefully here, maybe he's outside, there he is, David Disapio, and I just wanted to kind of, everything that I'm talking about, I wanted to sort of, how do you say, like, make it more tangible, have it not come from me, hear from someone who's like, just like an everyday nice guy, and who's kind of been there and done that. He's bought properties before, you know, you could say during my course, he's bought properties afterwards. And David, if you could sort of, yeah, maybe take us on your journey. I called him earlier, well, I talked to him before the event, seeing if you could do this. So maybe just, what was your journey before? Don't talk about my course, like, don't dig it up. But like, the point is like, how can we extract key principles from your journey and kind of give it to everyone so they're benefited? Sure. If that's okay. Yeah. And I always say, you know, all these YouTube interviews I do and here now, like I always say, be honest, be authentic, be raw, and everyone can kind of pick and prod and see if he's telling the truth and ask questions at the end as well. But thank you. Sure. Is that okay, guys?
Yeah.
You want to do this? Yeah. Cool. Thank you. Yeah, let's do it.
Thanks. Look, I'll keep it brief because literally I could talk about property all night long. And look, I will keep it brief because it's something I'm interested in. But yeah, please shut me up if I end up talking for too long, right? So really, I started about 5 years ago, and I just had this goal to be like, I want to buy property, and I want to build a large property portfolio. Coming from an immigrant family myself, I just wanted a better future for me and my family, and I just thought property was something that could help me do that, right? Didn't quite understand shares. I'd lost a whole bunch of money trying to share trade. Doesn't really work for me. I read a couple of books and thought, you know, property, that sounds pretty easy to work out. You know, you can control it, you can create leverage. So away I went. And I went and purchased the worst property you could ever purchase. Made the biggest mistake and bought a unit in West Footscray. I don't know if anyone else has property out in West Footscray. Anyone's got any units? Yeah. There's a huge oversupply of units in West Footscray. And if I just reflect back on my first purchase, you know, that property there in the last 5-6 years hasn't gone up more than $20,000. So I was just like, oh man, that really hurt. At the time I didn't realise, all I was looking for was good yield and something low maintenance because that's what my friend told me you did, right? So I did that and, you know, I knew that I didn't know everything. I knew I needed more knowledge, so I just kept going to meetups and I kept reading books and everything was telling me some different bits of information. So then second property ended up purchasing in Geelong, in Newcomb, and literally, I kid you not, the way I came across that was I was reading property chat forums and just scouring them and looking for what other investors were saying. I know this sounds ridiculous, but that's what I did because I didn't know what else to do. Like that's what I did. Ended up doing all right. Can't say that it was a great investment, but it's done all right. it was at that point I realised like I needed to change something because I wanted to invest interstate, but I knew I just didn't know how to do that. I had the same sort of fears that we heard over here. Like, all the people were telling me, like my grandfather was saying, David, are you serious? You're going to go invest in somewhere you don't know? That was just absolutely absurd for anyone in my circle, anyone in my family, and I kind of took that on board, right? And I know I'm not meant to spruik PK's course, but really the biggest turning point for me was actually paying for that course, because what that provided me was the confidence to not listen to my family anymore, to let that sort of go and just follow this process, which was well trodden, well proven, and just you know, really gave me that confidence. So then from there, you know, through COVID, from my living room, had a lot of time, wasn't going out much, was doing a lot of research and just applying the system. And ever since then, you know, purchased a few more properties, and I can definitely say that they've definitely grown more than $20,000 in that first unit that I purchased, which really hurts. But you know, some of these properties that the system and the course has helped me purchase have grown, you know, 100, 150,000 in a year. Like, it's just ludicrous. It is just, if someone had told me that you could do that, I wouldn't have believed it. I just wouldn't have believed it. You know, maybe, you know, because of COVID and things, there's factors like at play due to the circumstances now that make it better. Don't know. But at the end of the day, I know I've got a lot of friends who are panicking right now because they've got negatively geared properties and their rents aren't going up and they've got vacancies and they're in a position now where they're selling a lot of those properties because they can't hold them. So I'm very fortunate not to be in that position now, and I'm grateful for having invested in that, you know, that knowledge. So that's a little bit about my story.
I'm just going to kick off the Q&A,
yeah,
just to kind of balance it out.
Sure.
So first, let's talk about the suburb.
Yeah.
So Adelaide, Happy Valley. Happy Valley, for anyone who doesn't know, is in the kind of middle ring, south part of Adelaide. You know, that's kind of, it's one of those ones that's gone up tons. What were the challenges that you faced in buying it? Because, like, you know, and once again, I don't want this to become about my course, but the course isn't a magic bullet. You don't all of a sudden become a millionaire just because you pay and do the course. What were the challenges that you faced? You know, what's the reality of it?
That was a funny one. Yeah, the biggest challenge there, and I didn't realise it was a challenge until we went through it, right, was getting something off market in Happy Valley, right? That one really was luck, but also a little bit of effort. So finding stuff off market has always been a challenge, and I suppose something I learned through that is you just got to build relationships with agents, and that really helps. And I had a little system at the time when I was sending emails out, and PK likes this one, but I was sending out emails and I got really busy, so I ended up asking my wife to help me as well, and then she started sending out the emails, and then we were sending out like 30 emails, you know, a day to agents. And I wouldn't recommend this, it's very labour intensive. And then one agent finally got back to us. So that was one of the challenges. The other challenges was, you know, not seeing the property, and there was some damage in this property, right? You wouldn't believe it. It was like this water damage underneath the ceiling, and I was like a bit beside myself. And I remember texting PK going, PK, like, what is this? Like, I don't know what to do. And basically, you know, he guided me through this, which I'm very grateful that he did, because in the past I would have totally backed out of that. Building and Pest came in and they said literally nothing wrong with it, bit of cosmetic paint chipping, just get it painted, it'll be fine. Nothing structural, no problems, right? So that was challenge number 2. And I suppose, yeah, Adelaide's a hot market. So finding anything in that market, you know, that hadn't grown too much was a challenge as well. Yeah, they're 3 things I'd say were the challenges.
And I think that's probably like the other thing, you know, everyone's kind of cluing on to Adelaide and these places now. Like, you know, oh, Adelaide's doing really well. By the time you kind of hear about it in the media, it's almost too late. So like, we're not even buying really in Adelaide anymore. And has Adelaide gone up because of COVID? Like, obviously the answer is COVID and the stimulus from the government has obviously contributed, but that's not the only reason, right? So yeah, that's it's good to kind of balance out because it's not all rosy. You know, property investing is not like, oh, you come to this event and you're all good from now on. You know, you need to understand this.
Not at all. It's tough.
Yeah, exactly.
It can be, yeah.
It can be
It
tough.
has its challenges.
It has it like anything. But I just want to kind of give everyone the opportunity. David, how many properties? Are you okay saying?
No, that's fine. Yeah. Oh, like I said, I love talking about property. So we're at 6 now. Yeah, never thought I'd get to this number, but yeah, we purchased our 6th property this March in regional South Australia, and yeah.
Yeah. So like I would say David's like super humble guy. You know, him and his wife kind of committed to property investing as kind of your vehicle for long-term growth, and really just double down on it. And so if anyone has questions, the good parts of property investing, the ugly parts of anything at all, if you guys have questions, please raise your hands and ask directly to the maestro.
Careful, I'm not the maestro. He is the maestro, right? But I can try, yeah. I think this guy was first, one second, yeah, then we'll come over to you.
You have 6 properties. Did you face any serviceability issue? If so, how do you overcome that?
It's a really good question. I've got a really good broker.
But it still comes with income.
But of course, like there's always serviceability issues, you know, like that's one of the things you've got to face. Fortunate, like my wife and I have had both very steady incomes up until this point. I wouldn't be able to do it without my wife. So, you know, that's helped. I really hit a ceiling, I suppose, at the 2nd or 3rd property when I wasn't married yet. So getting married was beneficial. I wouldn't get married just to increase the serviceability. But the banks do like that, right? And no kids.
No kids helps as well.
No kids, just yeah. So that really helped, yeah.
But your property's in your name or the trust or?
There's a combination. So there's some in my name, there's some in the trust, discretionary family trust. There's some just in my wife's name. More recently, we've purchased in both our names because it was becoming too difficult to buy them within the trust. So really, they weren't going to give us the money for this last property if it was in the trust. So like, I was like, I want to buy property. So whatever we need to do to buy it, we'll do.
Can I ask last one? So how many properties in the trust you can?
2 so far in the trust. Yeah. Good questions.
Okay, so I've lost my question.
That's all. We can come back. There's another one over here.
Oh yes, I got it.
Sorry, man.
Okay, so you mentioned you had fears about investing interstate. Was Happy Valley the first one that you bought interstate?
Happy Valley was the first one purchased interstate.
Yeah.
It was a good owner-occupier sort of area. I felt safe, you know, there.
So what was that wasn't a question.
Oh, that wasn't the question.
Yeah.
Oh, right, yeah.
No,
Sorry.
So what was the data point that gave you the confidence? If you talk about demand, how did you measure demand? Was it vacancy rate, or was it clearance rate? I'm guessing it's not clearance rate, obviously. But what was the data point that gave you the confidence that I was happy to buy interstate without physically?
I can't give away the system. That's obviously what
that's the system.
there's a lot of data points, right? It's a great question. I suppose there's lots of factors. There's like over 50, right? But I suppose at the basic level, it's like demand to supply. It's the yield. It's the online search interest. Like how many people are actually searching for those properties in those areas. Have I missed any? Growth rates in the last 36 months. Like, they're all some of the key things that help you rule out properties from like day dot. Do you know what I mean? And that's what's becoming harder, more difficult, more challenging now, is finding those areas that haven't grown that much just yet. But once you get those you tick those boxes, you just get the confidence. You know what I mean?
But there's a difference between a suburb and the property selection as well, right? Because for the suburb, all the properties will probably look the same from a data perspective. Right? So then it boils down to which property and how much you pay for it.
Yeah.
So everyone can say supply, everyone can say demand, right? but you can measure supply and demand from so many different data points.
True.
Yeah, so I'm just curious about, you know, because you're talking about having fear about investing, you know, in a different state.
Yeah.
To overcome that fear, you need to really trust the data, and everyone can say the same thing and point to so many different data points.
Yeah. You're right. It's never consistent either. All the data points stay and
Something
they're
gave you
lagging.
confidence.
Yeah.
Something gave you confidence. So if
Maybe I'm a little bit naive. Maybe I just love property too much. I don't know. The system made sense to me.
Yeah, the question was more about what gave you confidence.
What gave me confidence?
Yeah.
I suppose I've never seen anything like this ever before in my life, right? I've obviously appreciate data and the work that I do, but I'd never seen it applied to property before. So anything was better than nothing, because the alternative was literally me looking at property chat forums or asking my friends, or you know what I mean? So there just wasn't anything else out there. So that gave me the confidence.
And if I can kind of answer the early question a little bit more, you know, anyone can find the vacancy rate in a size not hard. Anyone can. I'm putting your words in your mouth here, Dave. But what I feel that instills the most confidence is multiple data points. Like, let's say vendor discounting, right? When you start to see that in this suburb over the last 6 to 9 months, the discounting that sellers need to do or provide to sell a property has come down and down and down. Now they're getting premiums, you know, from what they list a property at versus what they sell. It's like, okay, that's one thing that's tracked. And then you corroborate with that with another data point like job advertisements, you know, which is a more macro, long-term indicator. And you say, okay, well, in this part of Adelaide or South Adelaide, job advertisements are going up, 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 up. We see in March, April, then 2020, it kind of dipped, you know, because everything dipped in the middle of COVID. And then since that time, it's going up, up, up. And even before COVID, it's consistently going up. You know, Adelaide was kind of down and out, 4 or 5 years ago or something like that. But you see it kind of coming back into its heyday. It's like, okay, that's another thing that kind of is like, hey, something's going on. And then you take another, let's say we talked about supply. Building approvals, supply is the enemy of growth. They're coming down, 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 down. There's hardly anything for sale in Happy Valley. I mean, it's hard to buy a property because there's almost nothing for sale. There's no new stock. It's all different. It's all this. So when you kind of get all these things, you form a picture in your mind. It doesn't remain as data. You can kind of, even though you don't travel there, you can see what even the local agents can't explain. Like, you know what I mean? Like,
100%.
I once again, I don't want to make this about my course or anything, but a lot of the times, you know, our students say that, oh, local agents are asking, why are you interested in the suburb? Like, this is like, let's talk about Bundaberg. You know, they're like, why on earth are you in Melbourne and wanting to invest in Bundaberg, right? And then next thing you know, the thing has gone up like $100,000 in 6 months, right? So by looking at data, you actually start to understand the kind of a weird example, but like the tectonic plates of what's going on in that property market, even more so than local agents, because they're just up here, they're just trying to sell properties. Does that make sense? I don't know.
No, it's a really good way of putting it. And you're right, you start to see the future. And I don't want to talk the course up too much, but literally my property manager in Happy Valley wanted to keep the rent at around $390 or something. And I said, look, the data's suggesting, and I've triangulated this with all these 3 sources, and look, I think it could get anywhere between $420 and $425. And she goes, no way. And then we ended up putting it up for $425, and within a couple of days we got it, right? And the whole market's now moved crazy. Like it's really gone off. But even the property managers were still lagging because I suppose they see the area in a certain way, but then once the data starts to point in that direction, you can not guarantee, but you can start to have quite a good hunch that rents are going to increase and it's going to be a good area. Anyway, I think there was a few other questions. Can we come back to this guy, because this guy's been trying to ask a question for you. Let's give him the chance.
I had boiling was you said you enjoyed Brisbane property that did you end up keeping? Did you end up keeping it, or the reason I'm asking the question because I've recently done that. I'm not in Brisbane, but had kept a goal on it, but listened to our fitness course because well done. Yeah, so I wouldn't have done it if I knew and if you guys were before. So from your, what did you do with your Bristol property? Did you end up keeping it?
Firstly, it's okay to make mistakes because that's the biggest way to learn. That's the way I've done it. Made a lot of mistakes, and that's how I learn. So don't worry, like it's okay. But no, I've kept it. I suppose for now, my thinking is at the point that I can't borrow anymore, and I do want to purchase another good asset or better asset, I would sell that in order to purchase another one. But for now, it's okay. It's not hurting me. It's okay. People will come back, and the rents will increase, and it'll be positive cash flow again. So it's not all bad. But at the point that it holds me back, yeah, I think we'll sell it. Yeah. Oh, gee, there's lots of questions now. How do we? How many do you reckon we got time for?
How many hands? Let's go 1, 2, 3, 4.
Easy. All right, let's go.
Go ahead.
Hi, my name's Ty. My wife and I, our question's about buying property on the market and property that's not officially on the market. We're from the Peninsula, and the majority of good properties go before they hit realestate.com or domain.com. If we're going to translate that to buying interstate, which is what we're looking at, that's a fear for us that we're never even going to be in the ballpark. And I think you put a post up a few weeks ago saying how there's actually not enough properties for buyers agents to service the people who are looking for the properties to buy. So when it comes to that, and I'm thinking, right, buying Western Australia or buying South Australia, how are we going to be in the ballpark of getting a good property, one of the gold ones that you talk about, not just something that's going to plod along for a little while?
That's yours.
I think there's like 2 or 3 questions in there, right? So I think you're wanting to buy properties off market. That was one question.
I just want to get a good property, but apparently, from my experience, a lot of the good ones don't even make it.
Yeah. So okay, so first question is that, okay, I'll answer that one. How do you get properties off market? And then the second one I think is, how do you get gold properties, like the good ones?
Like, how do you even get one because they're selling like hotcakes?
Yeah, gotcha. It's a great question, and I really faced quite a challenge doing that. I'm not going to lie, right? It's hard, but I'm still getting emails because I had like probably 5 suburbs that I was looking at. Some in WA, some in South Australia, like regional South Australia, and some in Queensland. And I'm still getting agents actually emailing and calling me, even though I've purchased a place. So it's just, I suppose it comes down to the relationships I've built with them. Somehow, I don't know how, they still remember me. So I spend a lot of time just calling them, asking them about their lives, just getting to know them as people and having a laugh. Like sometimes I'm even a bit cheeky. And I think that helps them remember me because not everyone does that. So that's the way I'd tackle that one. The second one, how do you find good properties? Well, I don't know any other better way to do it than to follow the system like that PK teaches. Like that's the only thing I know that allowed to gave me the confidence to do that interstate.
Well, I don't know what PK teaches. My question is, the data's not going to help me. Like if I can't find the property. Like data all says fantastic, go buy in Mandurah.
Yeah.
And I can't find those properties in Mandurah.
There's ways of adjusting your search so that you're not necessarily focusing on the hottest suburb. Because I made that mistake myself. I wanted the perfect suburb. Like I'm a bit of a perfectionist. I wanted that perfect suburb that all the stars were going to line up. But it doesn't exist, right? It really doesn't exist. You can't have it all. You can't have your cake and eat it too. So there's ways of adjusting the levers so that you can find these suburbs that are on the verge of becoming better, I suppose.
I'll just add to that as well. Data's one thing, you don't know the system, so I get you saying obvious conclusions to do the course, but putting that to the side, data kind of points you towards suburbs that are super hot, maybe not super hot right now, but up and coming, will become super hot. Who here has heard of the Rockingham City Council in Perth? Port Kennedy, Warnbro, Waikiki. I remember I want to say like early last year, mid last year, maybe around this time last year, the data wasn't that great, but it was trending in the right direction. And so a lot of people, a lot of clients, they ended up buying there, and it was super easy to buy there. Meanwhile, if you tried to buy in Happy Valley, it's like good luck kind of thing. Or if you tried to buy somewhere else, it's like, best of luck, it's hard. So exactly like David mentioned, one thing to know or to understand is, even if you don't do the calls, try to find try to find suburbs that are a little bit less hot. You can judge that for yourself. Try buy property there. If you're missing out, if you're, it's been a month and you haven't bought anything, then chances are it's too hot. Go to another place. That's one thing. And then the second thing is like, there's this whole thing of like where to buy, which is where the data comes in. But you're talking about how to actually buy it, how to actually execute on it. And once again, I'll just replay what David said. Relationships, relationships, relationships. I can put on my buyer's agent hat, which I'm not, but I can say, guys, like property investing is really hard. It's actually rocket science. And I've developed these relationships for 10 years with these top agents in the best suburbs, and you, my friend, have no chance of getting the pearlers, the best properties in that suburb, because they're all reserved for me. The guy's my best mate. He knows that I have clients ready with serviceability, with pre-approval, and it's just seamless. That's my buyer's agent hat. That hat is trash, because it's not true. If you're a normal human being and you're a nice person, like David was saying, you talk to a local agent. Once again, just go to Rate My Agent. You find the best agents there, be like, hey, my name is John, I have serviceability, I'm ready to go, I have my pre-approval, I'm serious, this is my criteria, this is, I'm looking for this type of property, 3-bedroom, whatever it is. Please let me know if something comes up. Now the guy might flip you off and say, forget it, I have no time for you. That's okay, go to the next person. And if you do that 5 times, you just spend half an hour every Monday doing that, like around lunchtime or something. There will be people who are also nice people as agents. And they'll be like, oh yeah, that guy John, he's called me for the last 2 weekends, or last 2 Mondays, and actually, you know what, I just got this property. And they don't favor professionals, they don't favor buyer's agents, they favor people who they want to favor. And if you come across as a nice guy, they give you these off-market deals. And the other thing as well is you don't have to get an off-market deal. That's another thing that in the property industry, it's like, oh, off-market deal, off-market deal, off-market. There's nothing intrinsically good about an off-market deal. It could be the worst property in the worst suburb. All right, off-market deals are good, but they're sometimes not good. So even if it's on market, that's fine as well. And the secret is, it's not really a secret, but if you know what you're looking for, get it before it goes to the first open home. Just chuck it under contract. You have your exit clauses, your building and pest clause, etc., to exit anyway. You have time to do your diligence. Just get that bad boy off the market. And I remember, I'm just putting you on the spot here, Bennett, I'm going to ask you to speak, but I remember Bennett, I always use this example because everyone kind of doubts that this actually works, but Bennett here is obviously a resident of Melbourne. You bought in, was it Pacific Pines?
Highland Park.
Highland Park, in the Gold Coast. Yeah. And I think, as the story goes, you had been calling, just like I was saying, calling a couple of agents, and one day an agent said there's this property, there was a divorce or like some sort of thing was going on, and they needed to sell it the next day or very quickly. The agent knew Bennett, who had never bought a property before by himself, and migrated to Australia.
Completed 3 years.
Just completed 3 years, so this was early last year, so he'd just been in Australia for a year and a bit. And the agent called him from the Gold Coast, like, why would they do that? They're nice people, they're normal people. He called the agent, lady I think it was, right? Called you and said, Bennett, if you get this property tomorrow, it's yours. Okay, and there was no other competition, it was off market. I can't remember the stats, but it was, you bought it for like mid 500s.
554.
Okay, 554. Yeah, what was the yield on it? This isn't like orchestrated, by the way. Just remember, what was the yield?
6.5.
6.5 on the Gold Coast. And what's it worth now? I don't know if you got about
820.
820. So
Good job.
I'm not saying that everyone can achieve those results. Like I don't want to be that guy, but was it hard?
Like I spent 2 months there.
2 months.
Yeah.
2 months.
But it was worth it.
It was worth it. And so if you're willing to put in the effort, the results are there. That's kind of the moral of the story. Does that sort of help? I just want to make sure I'm actually adding value.
Quick question, number 5, sorry. Talking about the data and the stats, and obviously we probably all listen to PK before we purchase the course, and then we go, okay, let's look at the data. So then we go to CoreLogic, I've got to buy a subscription. Once we do that program, and for you, where do you source this 50 touch points or 60 or 80 touch points? Is it by subscription services, or is it all available for free? And then, you know, there's a whole lot of other stats you're talking about which are all over the spot. So do you have like that?
There's data everywhere, right? There's heaps of data. It's the way to interpret it, I suppose, is the tricky part. But that all comes from software online, essentially. That's available to everyone. You know,
so we don't pay other subscription. Obviously, not CoreLogic is not one of your clients, but do we subscribe to a CoreLogic to help assist with the data collection?
No, we don't use CoreLogic. We use like raw data. You can get it from different sources. The source that we use it from costs $150.
Wow.
So it's like, you know, when I built the course, I paid a lot of money for bigger data sets, but you don't need to do that.
Yeah.
So yeah, the barriers to entry are very slim.
Is it covered and beneficial? I guess maybe you touched on later to invest in those bigger subscriptions or bigger data sets?
No, you don't need it, and that's the thing as well. Like, sorry.
No.
That's the thing. You know, like everyone's trying to sell you something, and whether it's a course or a service or a data set, you really don't need most of it. It's just bringing it back to the basics and being really refined. We can talk about this later, and you know, I don't really want to go too much into the course, but yeah, the simpler you keep it, the more refined, the more specific you keep it, the better it is. But also, there's no one magic website that just gives you everything. That's also to be. So it's not like I'm saying, go to this, you know, .com.au and here's the answer. That is not quite as easy as that either. Okay, maybe just in the interest of time, no one's yawning yet, but they will start. So maybe just one last question. One last question for today.
That's you,
I had a question around, like, if you've taken 5 years to get 6 properties, which sounds really great, but part of that lending strategy that you have, PK, you were talking about, like, if you've got your property strategy, but you've also got a lending strategy at the same time. It sounds like you and your broker have done a really good job of positioning yourself with that lending strategy. Could you talk about some of the macro principles around how you're able to apply that? Was it really about trying to get the equity out of each property, keep going? Highlight a bit more about that.
Each of them, yeah, it's a good question. Each of them have been a little bit different, but like overall, I suppose what helps is like your income increasing, and like obviously going from one income to then 2 incomes and being married and not having kids. Like the banks are just like, come, you know, take on more debt, right? But one of the key, I suppose, switches in my mind was going from buying negatively geared properties, like the place in Geelong, in Newcombe, to then buying positively geared properties. And then what I discovered was the banks were like, well, we can now count that income to the next property. Then they start to see not as negative, but as positive, as income. So your serviceability also increases there.
So probably a follow-up question to that. To do the strategy that you've done, is there a minimum amount that you should really be trying to earn as those incomes, whether it's yourself personally, that you should go, okay, until I earn X amount personally, I really shouldn't be trying to leverage off this income?
Not really, because I think you can buy a property from like the cheapest sort of area, you probably get you like 300k, you know what I mean? Like 250, 300k, you get investment grade property, right? You know, around Australia. So, you know, that's, you know, 10% of that, 250 to 30 grand. Like most people on like earning, you know, even like 60k, don't quote me on this, can do that. You know what I mean? If you save and you know, diligent with your spending. And if you've got 2 incomes and you've got both of you working and earn say around 120k, like it becomes a lot easier, you know. So I don't think you should limit yourself to, definitely not. No. Well, funny you asked that, because I've had a few brokers, not for any particular reason, but I've had a few along the way, and don't piss them off, is what I'd say, because I made the mistake, and I shouldn't have done this, but I didn't realise that they're a pullback fee. I'll be totally honest with you, but they if you refinance with another broker within, I think, 1 or 2 years, they actually don't get any of their commissions. And that can really piss a broker off, especially if they've spent a lot of time with you. So I unfortunately lost a very good broker doing that. I didn't want to leave the bank. I probably won't be using them anymore, and I'll go back to my brokers outside the bank. Yeah. Don't tell ANZ that.
We'll probably just leave it there, just in the interest of time.
Sure. Follow-up question.
Maybe you can connect later. Is that okay? Yeah, thank you. But
Thanks,
thank you.
PK.
Thanks, David. Just give him a round of applause. So just quick check. It's 7:33. Are we okay to go for another half an hour? Is that okay? I just want to be mindful. All right. Cool. So what we'll do now? Let's do a little bit more Q&A with me, and then maybe we'll have one more member more briefly describe and answer your questions. Is there anything else that anyone wanted to get out of the session? Just put your hand up. Just I want to make sure we're honoring everyone's time. Anything else that anyone else wanted to do? Yep.
Maybe can you touch base on loans? We discussed rules, like what not to buy.
Sure. Okay, cool. So let's do a little bit more Q&A. We'll have another member discuss, sort of present their journey, and then at the end, at 8 o'clock, we'll sort of finish it off, and we'll just have like an informal gathering. So everyone can talk to each other. Please do. You can come chat with me. But hopefully that's great. And yeah, like everyone is doing, if you need to go, no hard feelings. All right, so Q&A. Anyone who has any questions? Yes. Go ahead. Yep, in the green. Okay. Sorry, can you speak on So the question is, in regional properties, how do you protect yourself from getting a tenant that's maybe a lower socioeconomic status? Yeah. It's a really good question, and that problem or that risk exists in capital cities as well. And in fact, I'll say that if you're buying in an area in a capital city, the house price will be higher and the rent will be higher. Therefore, that risk that you take for accepting a lower socioeconomic person as a tenant is higher, as opposed to regional. You know, like, so I'm not saying you, but generally people have this kind of fear of regional Australia. It's like, why do people live in regional Australia? Right? Like, you know, we're all in capital cities here, but it's like, why would you live? You know, but there's real reasons. You know, there's more to Australia than just Sydney and Melbourne. And there's, you know, flourishing economies. There's fantastic people that live there, and in fact, I would say, I don't have the stats to back this up, but there's probably, in terms of people on welfare, there's probably less people on welfare, proportionally speaking, in regional Australia than capital cities, just because of cost of living. All right, so just trying to sort of demystify the premise of the question, but regional Australia, not just because of COVID and this flight, because everyone can work from home away from capital cities, regional Australia was bubbling up and increasing and improving in prosperity and house price growth even before COVID. Now I know in Melbourne everyone thinks that, oh, Ballarat, Bendigo, all these regional towns, they boomed because everyone just left Melbourne, right? That's not true. There is an element of that, but if you look at the last housing downturn, 2017, Melbourne, I think, don't quote me, came down 10%, Sydney came down 10%, Ballarat went up 15%, Bendigo in the last, even before COVID, in the preceding 2.5 years, went up, I don't know, 20%. Mike, you have properties there. So what I'm trying to illustrate is that regional Australia isn't this area that we go to invest just because we can't invest in capital cities. In fact, they have their own economies, their own fundamentals why they make fantastic property investment locations, and they're cheaper and more positively geared. Like everyone thinks that the job centres. Who thinks that it's safer to invest in Sydney or Melbourne as opposed to any other part of Australia? Please be honest. Okay, we have about 3 honest people in this room. Okay, maybe I'm just making this up. It's not true. In fact, if you look at the last 35 years of history, Hobart has outperformed not only Sydney, but also Melbourne. Now, I'm not saying invest in Hobart right now, it's a little bit too late for that. But I'm just trying to dispel this myth that regional is somehow inferior and we're making do by investing there. In fact, in many instances, it should be our first priority. Hopefully that answers your question. Yeah, back there.
I think there are 2 schools of thoughts in investing. One is the school of thought that basically says you invest as an investor for yield, for capital growth, etc., etc. And the other school of thought is you invest into a property where you can actually live, because the fundamentals of investing into those properties are still relevant to what applies to yourself, will apply to most people, family, and so on and so forth. So which of these schools of thought do you subscribe to or do you recommend, and what are the pros and cons of both?
Yeah, it's a really good question. So it's very common for people to say, I don't want to invest there, or I don't want to buy that property as an investment property because I can't see my wife and I living there, or I can't see myself living there, so why would someone else, right? Now, you have to once again realize that, and once again, my opinion doesn't matter, but what matters is that not everyone is like you in Australia. Not everyone is like me. I might be a little bit stuck up in this area of life and a little bit like modest in this area of life. For someone, that property that I wouldn't touch would be somewhere they'd love to live. And I'm sure there's properties that I would love to live where other people wouldn't even touch. So it's all relative, right? The truth of the matter is that what drives property markets is relative growth, whether that's relative growth in employment, in incomes, I'm talking long term here, in population over the long term, various things like that. Now, if, let's say Newcastle, I know it's not a Victorian example, but let's say Newcastle, Geelong is very similar. 10 years ago, or even 5 years ago, Newcastle, Geelong, I mean, it was nice, but was it as nice as Melbourne, or was it as nice as Sydney? Probably not. Maybe you wouldn't have lived there. Maybe that 3-bedroom house in Nor Lane in Geelong wasn't really the area that you see yourself living in, yet in the last 5 years, it's gone up more than 100%, right? So the way to understand this, kind of stripping even away my opinion, is see what's happened in the past, because history doesn't repeat itself, but it definitely rhymes. So if you can find areas in the past and properties that you think, I wouldn't have bought that, I don't see myself living there, because maybe it's a little bit rough, maybe there's like a housing commission house 2 streets away, you know, or whatever it is, maybe, you know, you wouldn't take your wife there after 6 p.m. That doesn't mean that everyone is like that. We're treating investing as a numbers game, as an investment, as opposed to an emotional decision. And if you apply that theory, you find that there's countless examples of suburb, like Frankston, okay, like with no offense to Frankston, but you're relatively speaking, historically, it's probably not as nice as other parts of Melbourne, right? Can I get a yes?
Definitely not.
Has Frankston not grown in the last 10 years?
Yeah.
So, you know, history proves the answer to your question. Hopefully. Really good question. Probably everyone's thinking about it. How do interest rates affect capital city house prices? Not well. is the truthful answer. So, interest rates affect people who have debt. Now, in Australia, it's kind of a unique situation, which is a little bit different from America or other parts of the world, where almost 30% of houses in Australia have no debt against them. You know, mostly the baby boomer generation, they don't have any debt. They're not impacted by interest rates. Then you have another section, let's call it 30% of homeowners who are investors. Investors have debt, yes they do, But in Australia, most of the investment activity hasn't happened in the last 1 or 2 years. This boom hasn't been because of investors, it's been because of owner-occupiers. So most investors have built so much equity in their houses that, yes, interest rates will negatively affect them, but it doesn't mean that they need to fire sale en masse. And also you have the benefit of negative gearing, not that you should invest because of negative gearing, but even if it kind of goes from positive to negative, you get a bit of it back at tax time. Okay, and then you have the last sort of, call it 30% of the pie or homeowners who are not the boomer generation, not the people who have completely paid their house off, not investors, but first home buyers. All right, and of that subsection, you really have about 5 to 8% of the pie chart who have bought their first home in the last 2 years. All they know is low interest rates. That's all they know. And they've stretched themselves. You know, 90% leverage, 95% loans. That is the part of the market that is going to be the most disturbed by rising interest rates. So if you think about the suburbs, I don't know off the top of my head, but in Melbourne or wherever in Australia, and this is a critical data point, where it's these areas that have been buoyed by these first home buyers that have utilized government subsidies and grants to get into the market. Those are the areas that could kind of ricochet all the way down. They're typically in the fringe parts of a capital city, not so much regional, or even secondary cities like Newcastle, Geelong, or Gold Coast. So that's kind of like, it's a nuanced answer. There's so much more to be said about interest rates, but yes, none of this is financial advice, but Sydney, Melbourne, I do expect to come down significantly. What is the terminology of a crash? Who knows? But if the terminology of a crash is falling by 20%, it's probably unlikely to happen. But there's always markets within markets. Like I said last time, Melbourne went back almost 10% 2017. You could have taken your money, put it in Ballarat, it would have gone up in the opposite direction. Bendigo, you could have put it in the Gulf, you could have put it in countless locations across Australia. Always markets within markets. But yeah, interest rates rising as a general statement is not a good thing. We're investing for 20, 30 years. We're going to go through interest rate ups, downs, plateaus, so it's a fact of life.
So you think the regions are immune to this?
Some regions, not everywhere. Once again, it's you know, some regions are getting very peaky. Like, once again, in the Victorian context, Ballarat, like, you know, you could go to auction and sell a property easily for $1 million in parts of Ballarat, even like a month ago, 2 months ago. Now there's no bidders. And there's so much new house and land and new buildings coming up, especially northern and northwest parts of Ballarat. Have to be very careful. Back there.
We work as migration agents in Rob, and we want to ask, have you ever used or correlated data about international migration movements and things like that to decide or aim what, you know, where to invest in Australia?
Yeah, it's a good question. I have tried unsuccessfully. Normally when someone migrates into Australia, they often go to regional Australia sometimes, but mostly they go to Sydney, Melbourne. You know, that's where everyone knows Australia, Sydney, Melbourne. But the statistics show they normally rent for the first 2 to 4 years. They find their feet, you know, they get good jobs. They're normally skilled workers in the first place. That's how they get the entry into Australia in the first instance. So normally there's not a direct correlation between house price growth and migration. But where those migrants go, normally rents start to go up. Now this is just a broad statement, there's exceptions, because those guys rent. And then after 2 years, after 4 years, then they really suss out, okay, now I know Melbourne, and I'm happy to put down $1 million in this location or that location. But everyone has a different preference of where to live. It's hard to trace that person, you know, from first arriving into Australia to where they ultimately buy a house. Yeah, just in the middle. Yeah, just here.
Look, in relation to first home buyers, and I'm asking if my son is building, he wants to be an investor. So this is his very first home, and so talking to his broker, he was asking, should I have an interest-only loan? because I'm thinking long term or not. So he was advised, no, if you're living in a house at principal interest and you can pay off your home. Look, I'm no expert in this, so what would you say to that? Like, from your experience to a first home buyer, because obviously you had your first home once upon a time. What did you do? Like, could you give some insight on what the best strategy would be in that sense?
Yeah, that's a good question. I don't know if I knew the answer when when we bought the first one, but in hindsight, I think it boils down to this principle of, do you want to become a property investor? And if you do, how quickly do you want to grow a portfolio from 1 to 2 to 3, or, you know, the number of properties is a bit of a vanity metric, doesn't matter, it's what they do for you. But just to simplify it, how quickly do you want to grow your portfolio? So if you want to quickly grow your portfolio, if you want to build wealth, if you have the requisite risk appetite, then generally you would go interest only. And the reason for that is that by not paying down the principal, you're preserving that cash, you're not giving it to the bank, you're keeping it yourself, and that adds up to become a deposit for your next house. All right, and of course, if you do it well, you don't need to actually save a deposit every single time. The value goes up in the property, you refinance, you go again. I'm putting words in the broker's mouth, but maybe the reason they told your son that was because your son is thinking, I want to grow wealth over the long term, but I'm not buying another property for another few years. And so the broker was like, all right, well, why pay only interest only? Pay the principal and interest down. On principal and interest, you also get a slightly better interest rate, so get that benefit. You also improve your borrowing capacity slightly, get that benefit, and pay it down. And when it comes to it in 3 years' time, you can take that principal out again anyway because you can refinance it. Are you sort of following that? Yeah, so once again, that's mortgage broking and lending strategy. Everyone wants to know where to invest and all that sort of thing, but in my mind, lending strategy is as important, finance strategy is as important as where to buy, what to buy, how to buy.
I also, I know someone who's got an investment property, but the broker keeps saying you should have principal and interest. Would there be an advantage for a broker to just give you a product that would give you more commission, or?
I don't think so. Like, I'm not a broker, but
Can I jump in? I'm a broker.
Go ahead.
So if you have no other deductible debt, then principal and interest on an investment might make sense because your own home might be paid off. So if you've got that debt there, you may as well get a lower rate, pay off the principal, and then when you're ready to invest again, you do what PK said, access that equity, or why pay extra in the meantime. If you've got your own debt on your own home, then it should be interest only. And no, brokers don't get paid any different. It's pretty much stock standard across all loans.
Okay, thank you. Yes, just here.
Hi, Becky. I'm just interested in your journey. So we talk a lot about buying, but is there an exit strategy? When do we sell? When do we know when's an exit?
Yeah, so who else has this question of how to exit? Yeah, it's a common one. It's a really good question. Now, it's not my strategy, or it's not like some sort of secret sauce. Generally, how property investors have done it for, you know, yonks in Australia, it kind of boils down to, you know, you buy, I'm just making it up, 6 properties over the course of 10, 20 years. And I'll just kind of deep dive into that second. There's so many stories of, like, you know, David mentioned, you know, 6 properties in however many years. It takes time. You know, it's not this is not like a competition that, oh, my borrowing capacity ran out after 3 properties in the last 3 years and, you know, property investing doesn't work. It takes time to build a portfolio. It takes 10, 15 years, etc. Everyone's different. But then the exit strategy that most people adopt, or many people adopt traditionally, is when you do want to retire or when you want to supplement your income, reduce your working hours, you just sell 1, 2, 3 properties, a proportion, hopefully less than 50% of your overall portfolio. What that does is that you get cash in the bank after paying capital gains tax, you get a discount. And using that, you can pay off the debt for the properties that you didn't sell, the ones that you still hold. So just kind of, I hope I don't get the math wrong. Let's say you accrue a property portfolio of $3 million. Okay, you got debt on that thing, of course. Now, if it's positively geared, you're not having to chip in every month, every year to hold that portfolio. It holds itself. You know, best case scenario. In 10 years' time, once again, property doesn't necessarily double in 10 years, depends what you buy. But let's say in 10 years' time, all those properties double, that 3 million portfolio becomes 6 million. Now, let's say that was 6 properties. You sell 3 of them, and therefore you get $3 million. I'm just rounding numbers here. $3 million in the bank. Use that $3 million to pay off the debt of the 3 million portfolio that you still have, 3 properties, you know, $1 million each. And now you've got a $3 million property portfolio with no debt. Okay, with 0 debt, you haven't paid the principal down. It's the market that's allowed you to pay off the debt. Now, you know, this is kind of like a perfect scenario. The reality is not as easy. It's easier said than done. Everyone's different. There's more nuance in that. But that's typically the exit strategy that many investors strive towards, and I also strived towards when I started. Does that help?
Yeah.
Good.
Yeah, usually people prefer buying house instead of units because for the growth. But I was just wondering, what if you're buying a duplex or group of units? With the growth, does it do same as units or?
Yeah. So, you know, everyone knows, especially in Melbourne, units don't grow, right? Like they kind of suck. But it's not the case everywhere. And I'm not saying to go out and buy a unit just now or anything like that, but it depends on which market they're in. Okay, so if you're buying a new tower that's, you know, being built, I'll give you a story. Like there's this place in Sydney called World Square. It's right in the center of Sydney. In the year 2000, I think around the Olympic Games, they built this tower, hundreds of units. They sold them for about $500K each. And the whole thing was like, now Sydney is a world city. They're hosting the Olympic Games. This is a smack bang in the middle of the city. How could you go wrong, right? Like if you're a new investor, you're like, I believe the brochure, right? Right now those units are going for the same price as they were 20 years ago. And that's because in that time, there have been countless more towers built in the center of Sydney. Makes sense, right?
Yes.
Sydney CBD. So the answer to that question is, where are you buying? Now, if you're buying a block of units, well, once I'm not saying to do this willy-nilly, but let's say in Townsville, in Queensland, you know, 3 blocks or 4 units in a block, you know, ground story, 20 years old, brick, low maintenance, that thing is going to perform. You know, as long as you do you buy it the right way. That's different from buying a 100 units. So it's kind of nuanced. And I also just want to take the opportunity to say, sorry if I'm kind of, this is verbal diarrhea, but these days people think that the gap or the price between units and houses is getting bigger and bigger. Have you heard that? Yeah. And so they kind of think that there's an arbitrage opportunity. Buy a unit because they're going to catch up to houses. You heard that theory, right? And that theory is right in the last 3 to 5 years. Is that the chart, you know, it's like, it's going like this. Units are here, this is detached houses. So it's like, oh, well, units are going to go like that, right? Let's make money. Now, if you zoom that chart out for the last 30 years, you find that even though right now it seems to be a good opportunity, over the long term, the price between units and houses has been diverging anyway. So what that tells me is that over a long-term trend, units are becoming less and less in demand in capital cities around Australia. Yes, there might be some value there right now, but over the long term trend will continue to prevail because they're not making more land. Right?
So is there an opportunity, ever so slightly, to get rid of a shit unit? Like,
are you talking about your own one?
My own Like, I'm desperate to get rid of that crap.
All right. Anyone want to buy a unit? Yeah, I mean, I think David's mentioned this before, but we sell properties only if we know they're not going to perform, and we can do much better with that capital and borrowing capacity. right? Like I know so many people who had bad properties in the last 2 years and they sold them, but a rising tide lifted all ships, and they're like, oh, it was a crappy property, but I would have made $200,000 anyway. Only sell. It's just general advice. Just only sell if you have to.
So, as your course teach you when to sell?
When to sell is just the other side of the same river as when to buy. You use the same data, you flip it on its head, it's like, oh, I wouldn't buy here, therefore maybe it's a good time to sell. It's not quite as simple because you follow a stock market and you follow like investment banks, brokerage firms, and they always tell you buy, hold, sell. But sometimes their recommendation goes from buy to sell, right? And it's like, or it goes from hold to buy, or it goes from sell to buy. It's like, well, you just told me to sell it, now I'm going to buy it back. So, it's complicated. I'll just take one last question, guys, and then what I'll do is I'll just ask Chirag to just speak for 5 minutes, if that's okay. Just another kind of, breathing life into all of this conversation, real life example. And then at the end, we'll just kind of wrap it up. Please stick around. Yes, last one.
Just a quick one. With regard to your course and model offer, can you also offer like a strategy session to help you, if I've got a goal or objective, can you help me sort of try and achieve that goal?
You can come chat to me afterwards. I don't want to make this about my course or what I offer, but yeah, you can chat to me afterwards.
Yeah, okay, fish.
I'll just respectfully say we'll come back to it. But Chirag, I just want to introduce Chirag here. So similar to, I think, David, Chirag had a couple of words in your mouth. He had some properties before it was one. You did the course, bought another 2 properties, 3 now, okay, 3. And once again, I'm not just getting clients up here to kind of say how good the course is or anything, but to genuinely share real life examples. And if anyone else who's not a client wants to do so, you can also just put your hand up and share. But hopefully this brings you value. So I'll just ask you to go for about 5 minutes. I'm just conscious of time. And then we'll sort of wrap it up, and then you guys can talk to each other, maybe outside or here. You can talk to me, and we can. Is that okay? Do I have your permission? Say yes.
Yes. Thank you for the wonderful opportunity. I was a lecturer in India, so that's why I'm loud. Still I'm nervous, so my leg is still shaky. So if you don't smile, I will end up with teaching you the pharmacy. Hopefully, okay. So my journey was a little bit messy. I was accidental property investor. I have no idea I want to invest the property. First of all, I don't want to. That's the first thing. Second thing, in 2017, I bought my PPOR in Western part of the Melbourne, okay, in Tarnak. First thing, me and my wife want to get rid of this debt. Is head, right? Always, parents, spouses, friends, family, everything. Get rid of the debt. That's all I wanted. Okay, within target is 7 years. I'm always target-oriented person. So my target was 7 years, 7 to 8 years, I will get rid of the debt. 2019, one of my mortgage broker called me and said, would you like to go for investment property? I said, what's that? I said, you can invest. I said, but I don't have money. I'm paying that right now. He said, no, you have equity. I said, what do you mean by equity? Okay, so that from here to here, now I own 5 property. So now I will tell you the gap, how it happened. Okay, then she gave me all the briefs. Within, I think, 1 hour call, we end up with convincing that, yes, I'm going to get 1 property in Adelaide in 2019, when nobody's looking at Adelaide. Okay, now where here, the marriage part's a big role. My wife told me, okay, we want to buy property, 1 condition only, that's it. Only 1 condition. It should be near to the city. That's it. That's all it is. And we have no idea. So our property manager, the broker, arrangement person, he called me and he said, oh, you are going to get free my service. I don't know, there is something around happens in the property, right? So there was a brand new property, but good part is near to the city, 5 kilometers from the northern side of the city in Adelaide. We end up, okay? Year passed by 2020, nothing happens. That property just grew by $25,000. I never been cared. It's negative gear property, pure negative gear. I'm pushing $10,000 each and every year, okay, after tax. That was a property. So I've been there, done that. So then I realized, okay, what to do? And again the broker called me, same broker. He said, you want to whatever? I don't want any property. Because I'm paying a lot of money to that. Okay, that's fine, but you can have another property. I said, how can I have another property? I'm paying here. I can't reach. I have one debt on my PPO, one debt here. Supposed to be giving me the money, but no, it's taking money. I said, no, you can't have it. I said, are you serious? I said, yes. Then my wife told me only one thing. Let's be serious. Let's be serious and do one thing. Focus everything on education. Let's start rolling. Now where I'm good at, because I did my Master of Pharmacy and good at research, good with, the research is Google. That's very hard. Okay, I started researching in October 2020. Yes, I still remember. Started reading books, and one of my friends asking me how many books you read, and I never realized I read more than 15 books, only for the property. Then I started reading books from the US, which doesn't make any sense. I said, okay, stop now. Then I went to the Google, started working around, YouTube videos, 600 hours. I met everyone in Melbourne. You name it. They know me as well. Because I was looking for art. What? I want to build a property portfolio. Because now I know, my wife told me that. And she's also on the same page. Okay, so she likes that one. And I'm more intense in that part. Started looking here and there, started asking questions. You have more knowledge. Now, as a result, from curious to become furious. Okay, I was hunting now. Knowledge constipated everywhere. I know all the bits. The good part is also I always read the self-help books, which help me to align my goal in my life. And that one thing told me very clearly, I remember, it is if you want to read this slide age, the example is, if the knowledge has the power, then right now I have more knowledge about diabetes than 10 years back. But I got more patients now. That makes sense, that's right. Then I said, okay, how do I know? I do so much knowledge is there. These vacancies, these online interests, okay, do these. Core logic is there. Property value is there. Okay, what happened 10 years back? Find it out. This graph is there. Very good. Fun lucky. I couldn't bear that. And then at the time, a point comes where actually what is right. Then I was looking for one more John C. Maxwell book. It mentioned that. Let's say if you are on the road, you can't see anything. But let's say if you do $50,000 in your pocket, you are looking for you are booking a brand new Mercedes E-Class red color. Now what you see on the road? I said, Mercedes E-Class, I was searching for it. That means, yes, your knowledge is a power. If you apply to, if you're looking for it. Now I understand, that makes sense. That I'm looking for something. And at that time, PK came in the picture. He is talking about a data, which I love. And they did. But I was very confused. At the same time, I saw the video, couple of videos. In that one, Bennett. He is one of my friends, okay? I don't know before. But PK took an interview, and 2 days after I see his video, my wife saw that video. And I know that I have to join the course for PK. It doesn't matter about the cost. Because what I'm paying, that's why, right? That's why it doesn't matter, because I'm paying $10,000 every year. It's better to do something which makes sense. Started. First call PK, I said, don't tell me any sales pitch, I will be on. I will join the course, that's it. And then we started. May 2021, yes, May 2021 we started the course. End up with the property in October 2021. That is after the course, okay? Then I was looking for a good mortgage broker. Now that was a very, very, very difficult task. Reason is that all the mortgage, remember, I know one books it's mentioned in the property, one of the biggest risk taker is you. Nothing else. It doesn't make sense, I said. Property manager, they take a cut. Salesperson, take a cut. Even the seller, take a cut. Who is paying? Bank, take the cut. If something happens, property is gone. Who is paying? At the end, I am in the very different situation. I said, okay, let's be clear. Let's start, work it out, this one. End up with a good property. Within 6 months, I got $50,000 in that equity. Find out the one good mortgage broker. Now I was looking for, I have a couple of questions asking to mortgage broker. Now, previously I did it. Now I got the mortgage broker who is property savvy. He has 30 plus property. And he got mentorship from person who is having 100 plus property. So I exactly know what I asked for, and exactly told me all the roadmap. So now the conversation is quite different. The first property conversation was, how can I get the second one? Should I wait or should I sell it? Now the conversation is completely shifted. Now I have a 5 property, and that is because of my wife. She told me one more thing. If you want to go for portfolio, capital city. I said, what? They said, no, I want 5 property, capital city, then after that you do whatever you want. He said, okay, that's fine. Talk with the mortgage broker, adjust the finance, everything is on the places. Now I covered Brisbane, covered, Adelaide, covered, and then Perth is covered. So I got now 5 property in the capital city. Now I told PK that now next 5 will be regional. The good part is all these properties positively geared. Now that positive gear helped me to bind with the Adelaide property. Now Adelaide property grown too much. At that time 25,000, right? Now property was bought in around 525 and now it is running around 730. It's just recent data. Okay? We haven't done the valuation as of yet, but that was my whole journey. Next part is now I'm going to buy 5 more property, but in regional town. Now I'm telling you by the confidence is because I have a roadmap for next 5 years, exactly what I need, a yield is required, vacancy rate should be, and how much property should be in roughly estimate. Second thing I got the course that I'm very good with the developing the relationship. Previously I was not, but that was a part of the course and that helped me a lot. And as a result, when I was hunting for the property, is always looking for off the market deal, right? That's the main cause. And I started wondering how the people get it. But when I started having conversation with the sales agents, some people, now at the end, now I tell you the end result. Now I got more of the market deal than the on the market. So currently I got 5 or 6, I think just 6 property off the market right now on my email inbox, where I'm currently looking in that zone, then on the market, which is a good one. So that means it's all about relationship, how build for a couple of, it takes 6 months. To be honest, when I focus on the suburb, my work starts from there. So I focus on that suburb, start working for 6 or 4 months on that suburb, and then end up. The good part is that the course is very best. And bad part is also there that I'm dealing with the course. So if I'm good, then property will be generally good, right? If I'm bad, then if I rush. Second thing make me nervous right now is interest rate. Okay, that's the current scenario, right? Interest rate is rising, this and that is going on. Sorry, 1 minute extra. Okay, interest rate is rising. Now I was reading one books, it mentioned clearly that as a property investor, if I am a long-term property investor, people forget one thing. Interest rate rise, that's fine. Capital growth will be up and down, or maybe property price may be up and down. But find out for last 60 years what happened. The third and most influential component they are missing, that is called inflation. Now I know the relationship between these two, but when third factor comes, it spoil everything. And that's told me that right now you're asking the wrong question. I said, what's the right question? How can I buy a property which is interest proof? It's just same thing. I like the shot, I can't buy it, and second thing, how can I afford it? But once stop the mind and another one start running the mind. And that book helped me that ask a different question. It's not like that. In every scenario, people did the very good. And that's why right now I can tell after this course, I'm not promoting the course to be honest, that after the course I have more clarity. It's like looking for a Mercedes, right? Same way. I got so much data, but I know which Mercedes, which to look for, which color to look for, which kind of wheels is required, which kind of trim is required, and what I need. And as a proof that history proves that I'm a good driver, so that's why I drive Mercedes very well. If I get it. That's all my journey. In 5 minutes.
I bet you didn't think you'd get a free motivational self-help. Okay, yeah, a couple of questions. Go ahead.
Yeah. So, when you sign up for the course, how much time do you spend? I just want to understand. One of the biggest I've got is finding times. Job, kids, family. Like how do you make time? How do you make it happen?
I'll tell you that. I'll ask you one more question in that. When you're a bachelor, you have time? No. When you're a bachelor, you have time? No. Married? No. Kids? No. 2 kids? No. If I find the time, never. So, the easiest way, when I started my journey as a property, on a serious note, I was spending 6 to 8 hours every single day. On YouTube. On YouTube.
Oh.
On YouTube. Okay? On YouTube. and messed my brain a big time after 6 months. When I started the PKS course, I have different agenda in it, because now I know that knowledge is filtered out and I exactly know what to look for. And course is structured such a way that along with the, whatever the factor is mentioned, along with that you are doing practically as well. For example, somebody asked the question right now that how do you know that course is better or not, or factor is better or not, okay? Easiest way, what I did. I tell you easiest way. Whatever PK taught us, that's fine. I put the data, go back to 5 years back, get the data, and apply the data, and forward to 2 years. If the data what PK mentioned, if it is working after 2 years, you will find the suburb, right? Look all the data, take the statistic, and most of the 88% is matching. So that's proof that yes, data is working. Now if data is working, which is not working? And variable is me. So I started working around 1 to 2 hours, depend upon your appetite. But I can run for 6 hours. It doesn't mean. But 1 to 2 hours is healthy. You can think and through, as well as the first time if you're doing, it is healthy to run the videos of the course, whatever we have, and as well as look around at how it applies. And then it makes more sense.
The sales pitch is 3 to 5 hours a week for a couple of months. Okay, maybe just one last question.
Yeah.
Maybe like try to keep it to Chirag's journey as opposed to the course. This is not about me. So yeah. Anyone else want to ask anything?
Good.
One right here.
Yeah.
Your story is a bit different because you invested in all capital cities, while all the courses, everyone where we go, we say, okay, regional area is a better place. How did you? One thing was clear for you that there's a decision taken by Home Ministry that it has to be capital city. So you need to take a decision. But then how could you find the property in the capital city with positive gearing?
That's okay. Keep in mind, okay, the first mental block I had, okay, I'm talking about myself, okay, I cannot rely on it. Mental block, can I get the off the market deal or not? I always deal in mind, I can get whatever I want. That's the first thing, period. Now, how to get it, that's a different question. Second to that one, even 5 years time, if somebody tell me that whether you can buy a positive geared property in the capital cities or not, I will still say yes. Reason is, once you find it, if you can't get it, that's a different story. But once I defeat myself first, then I definitely can't buy it. And there is a way to around it. See, the vacancy rate and other things are still there. Some of the suburbs are growing, some of the suburbs are hot, or some of the suburbs are lesser hot or cold, which is going to come in the market. And still there is a capital city, you can find a positive geared property. It's just, it's have to spend around time. And course, design that way, it will structure that way, it will help you to find it. For an example, to find it. But how to find, what to find, where to find, is still come with the Mercedes. You have to buy your Mercedes, nobody else can buy. Which color, whatever you need, is depend upon the risk appetite. For example, right now, which I was looking for, where vacancy rate is clear, yield was clear, yield was a double digit, yield was clear. I want the property which is yield between 5.5 to 6.01, that's it. Now that much course clarity is there. But that course clarity is depend upon the land. For an example, 60 people are there who might teach to the pharmacy. Do you think everybody has a first rank? No, right? Somebody comes first, somebody comes last. It's dependent on the course. How you take it is all up to me. And I was ready for that one. And that's why I can manage and I can put it. Course is so simple. Let's say for an example, right now, regional criteria, regional town or whatever you say, because of my wife, I go to the capital cities. But the next target, my wife is out. So that was fine. Now she already told me that whatever heck you want. So second question I asked to my broker, when I can buy next. He said, okay, this is the thing is required. I said, okay, this is the thing is required and this is the rental is required. Go for this one in December. I said, that's fine. I told PK that December is the next one. And that is will be in the regional town.
Thank you so much. Yeah, I think the last thing I'll say, just to kind of take that strain of positive thinking and kind of motivation and things, is that you know, you might have the mindset of thinking that 2 years ago was the best time to invest in property. Like everyone obviously would love to have invested. And then 2 years ago, people were thinking this is not the right time to invest because of COVID. Previous to that, in 2018 or 17, people were thinking, I just missed the biggest boom, 2013 to 17 boom. This is the worst time to buy property. 2 years or 3 years before that, they were thinking Melbourne never grows. In 2013, they were thinking property investing doesn't work. 3 years before that, there was the GFC. Yeah, so you guys see what I'm trying to say? And you know, it's not meant to be a motivational seminar or anything, but Chirag is 100% right. The world is literally just a reflection of your own consciousness. If you see that there's value here, I personally couldn't care less whether you do my course or not. But you should use property investing to get ahead. If it's right for you. May not be right for you, maybe stocks are right for you. But I just wanted to leave you with this note that you know, the world truly is a reflection of your consciousness. And let me just get a raise of hands, like, who here, and once again, I'm not trying to kind of come across as some like Ray Kerwin motivational speaker or anything like that, but who here genuinely wants to earn a passive income, not to get the Mercedes, but to just not have to work or be able to reduce their hours at work? You know, like that's all we want. We're just normal people, right? And none of us really want, I mean, someday I may want a Ferrari and stuff. I don't have a Ferrari, but you know, that is what property investing affords you. The YouTube ads and the Facebook ads and the seminars and all these gurus will tell you, you know, we'll get you there in 5 years, we'll get you there in 10 years. I'm telling you right now, I'm going to take a bit of a punt and say, none of you will retire in 10 years from property. It doesn't work like that. It takes time. It will take you 10 to 25 years. That's the reality. But what's the alternative? Right, what's the alternative? If you have a better alternative, I'll come to your meetup. So yeah, the property changed my life, and I think the other thing I'll say just to wrap up is I'm truly, truly grateful, you know, for everyone who follows me on my Facebook group, or following me on YouTube or any social channel. I really appreciate it. You know, a number of people subscribing or following on Facebook, or number of clients, or all of these are really just vanity metrics. You know, I get a real kick, you know, these days of just helping people. I know it sort of sounds kind of weird because I'm getting paid, but that's the truth. And I would literally just like to re-emphasize that point, to take action. There's this amazing podcast, most of you already know it, The Property Couch. Who listens to The Property Couch? You know, great guys, different philosophy, but great guys. They always say that knowledge is empowering, but only if you act upon it. And I couldn't agree with that more. So thank you for coming. I really appreciate it. Thank you for taking time. We could have been doing anything at all. Thank you for being here with me, being here with each other. But do something about it. Once again, I do not care if you do my course, okay? But do something. All right. Please stick around. I'll be here. You can chat with me. Please chat to each other. This is not just about me. I also just want to thank Samir and my team right here. A lot of you will know Samir for organizing the event. I want to thank Rajiv, who actually found this place. He lives in Melbourne, so he knew Samir's wife, my wife, and all of you. Thank you so much. And Chirag as well, for you here.